Sup guys, your boy QuickStocks is back. I hope you're having a righteous day. So we already have a small position in Zillow of $1,000. What's the move? Uncle Sam is giving us $1,200. Should we buy TP or Zillow stock? Give me some dopamine and hit those thumbs up. Let's get right into it. Zillow, ticker ZG, trading for $34 a share. Currently down 47% from its highs after being down nearly 67% before the $2 trillion relief stimulus passed as of March 25th, 2020. Interesting fact before we deep dive into Zillow. Zillow was created by Rich Barton and Lloyd Frink, former Microsoft executives and founder of Microsoft spinoff Expedia, and Spencer Rascoff, a co-founder of Hotwire.com. So let's get into your quick analysis. What is Zillow? According to Zillow's website, they are the leading real estate and rental marketplace dedicated to empowering consumers with data, inspiration, and knowledge around the place they call home, and connecting them with the best local professionals who can help. I mean, it seems like your fairly typical sales pitch, but let's continue. Zillow services the full life cycle of owning and living in a home, buying, selling, renting, financing, remodeling, and more. It starts with Zillow's living database of more than 110 million U.S. homes, including homes for sale and homes for rent. The website offers several features, including value estimates of homes, value changes of each home, views of homes, and basic information on a given home such as square footage and the number of bedrooms and baths. So how does it work? In theory, Zillow is completely free, or at least just the middleman. Well, it's important to note that Zillow states it's actually a media company that generates revenue by selling advertisements on its website. And if you're watching this video, I'm sure you understand monetization, but to put it simply, Zillow monetizes search traffic with ad revenue from third-party services like home builds, mortgage lenders, etc. Zillow also generates revenue through Premier Agents, in which agents pay to advertise their services. So now that we understand what Zillow is, let's take a look at some numbers. Zillow has $2.5 billion in cash and short-term investments as of the end of February 2020, which covers all of Zillow's debts. However, when you take a look at Zillow's $2.1 billion of debt, Zillow's debt chart isn't as murky as it may seem. $563 million of its debt is asset-backed debt. In other words, Zillow owns the house, which is debt. So more accurately, Zillow holds about $1.6 billion of corporate debt that matures at various times throughout the next 6 years. Even more interesting, Zillow can settle this debt in cash or stock. So I'm sure some of you are thinking, Zillow is just a third-party realtor. How in the world did it become a multi-billion-dollar company? Well, first, the company reportedly had 36 million unique visitors in January 2020. And 4 out of 5 homes in the United States have been viewed on Zillow, which is pretty mind-blowing. Now, let's take a look at the companies under Zillow's umbrella. Trulia. Trulia works similar to Zillow. It is a real estate marketplace where interested buyers and renters can search the database for homes in a given area. Trulia gives in-depth neighborhood reviews that provides buyers with information about school districts, crime, and walkability of a given area. HotPads. HotPads serves renters who are looking for a new apartment or house. The search platform was founded in 2005 and acquired by Zillow in 2012. It is a part of the Zillow rental network and generates income using the same model that Zillow does. HotPads offers landlords and property managers background screening services for $29. Listing a property on HotPads ensures that it will get seen on Trulia and Zillow as well. We also have Realestate.com as another member of the Zillow rental network. Realestate.com is a rental estate marketplace in which first-time home buyers can search for and find homes that suit their needs. While the site does not cater to a specific niche, experienced homebuyers will also find the site to be of use. It offers visitors unique and comprehensive search options that make it easy to find a new home. Zillow Home Loans is a new venture in which Zillow Group has set out to generate revenue by enabling homebuyers to fund the purchase of their new home through the same site that they found it on. So here's the deal. Zillow is a boss company. Let's be real. When I go to buy or sell a home, I'm going to start online. Very likely with Zillow. The idea I can get a Zestimate of my house price and get it listed and sold with very little effort in comparison to traditional real estate. Honestly, it's just extremely appealing. However, technically Zillow isn't showing a profit on accounting, although it is cash flow positive, and that's definitely worth noting. In other words, Zillow is self-financing. They're using the cash flow from their advertising business to help get their home buying business off the ground, which they are definitely going to see a huge roadblock for at least the next few months. The thing is, we really don't know how bad this CV thing is going to be. Is it really a good time to be buying a company whose entire source of income is relevant to how the real estate market is doing? Well, that's why we're seeing such a discounted rate. At these levels, I will not be purchasing Zillow, as there's just too many other attractive companies on sale that will be much less affected by current economic conditions. However, with market volatility, I wouldn't be surprised to see Zillow go back to around $25 a share, in which it would be much more appealing to buy Zillow around those ranges. Anyways, guys, that's all we have for today. Be sure to give me that dopamine and like the video. I'll catch you guys tomorrow in the next one. Take care.